Quick true to life story. Sudden rule changes, unpaid invoices, tariffs that appear overnight, even one missing certificate. That's all it takes to turn an export win into a crisis. Today, we're breaking down those shocks, how you can plan for them, especially as more companies are moving into international markets. Today, I'm with Samir, a professional in the international trade space that I've known for several years. He's got global experience. We'll talk about practical ways exporters de risk market entry, protect cash flow, and keep launches on schedule. This episode, as always, is sponsored by Hyperion Business Solutions. In addition, Samir is the host of the Global Nomads podcast, and we encourage you to subscribe to his channel on YouTube and Spotify. Samir, thanks for joining. Good to see you again.
Thank you, Toby. Thank you for the invite. I really appreciate this opportunity to talk about something I'm really passionate about. And international trade is top on my list of when it comes to business solutions, because I do believe that there's a lot of un, uh, untackled problems that people forget about and opportunities of growing globally that we need to look into when we're talking about also things like market diversification and over reliance on one particular partner. So I think it's very timely. This topic that we're discussing today is honestly on top of mind of a lot of entrepreneurs that I interact with.
I agree. It's always been relevant to a lot of the businesses I've worked with, but today that is even more so the case as people look at tariffs and global markets. How can we change? How can we adapt our business and grow into new markets? But there's so much mystery and concern about what that will entitle and entail. So really looking forward to learning from you today and hearing what your thoughts are on that and how to overcome some of those barriers. For viewers who aren't aware, can you briefly describe the practical supports that are offered by various arms of the government, trade finance, insurance, guarantees, market intel, and when should a company reach out?
Well, thank you for that first question. I think it's a great one to set the stage. Honestly, if you look at the Canadian government, the way the Canadian government supports the companies in Canada that are trying to find new markets for penetrating with their goods and services is amazing. Like, I worked in different countries, I lived in different countries. I am an immigrant here who moved 7 years ago, so I have had experience with dealing with countries not just in North America but also across the pond and in places like Eastern Europe, Western Europe, the Middle East, the CIS, and so on. So I've definitely seen in Canada that there's a more support systems for the companies, especially in the province like Alberta. Why I'm pointing out Alberta in particular, because the Alberta government has their own team that supports uh, companies looking to export and enter new markets. So they have a specialized trade team. They have grants that they offer, such as the AEEP, Alberta Enterprise Expansion Program. But also on a federal level, you have the trade commissioners, for example, who have their own grant called the CanExport program. And both the trade team at the government of Alberta and the trade commissioner services are great tools to find ways to enter new market because they will have leverage, they know people, they're located in some of the markets, they work closely together with the embassies and try to have not just the trade missions into those countries but also make meaningful connections for Canadian businesses. Because at the end of the day, if you look at market penetration, it sounds simple, but how do we get those contacts? How do we make meaningful relationships in the new market that you're not aware of, so that way you can start working with those people? How do you mitigate some of those cultural differences? And that's when the trade commissioner services and the trade team of the government of Alberta come and play, and they help you out. If you're a first time exporter and you've never done it and you want to start writing a business plan, understanding is your business even ready for exporting, then uh, Canada wide, there's a program called Trade Accelerator Program, TAP for short. It is offered at different levels. When I say different levels, by different organizations, is what I'm trying to say. In Calgary, for example, it is offered by Calgary Economic Development. And that is a great place to go to if you're a first time exporter, never done it. You have had some success selling here in Canada, but now you're looking into expanding into new regions. this is a great opportunity for you to go, and for the most time, it's a free program. Again, depending on the city you're in.
Quick,
And
so quick.
yeah,
Sorry, I was just going to say before you go on that, just one quick question: would people be able to reach out to you if they're in a different city than Calgary, and you'd be able to point them to the right person who's providing that assistance in their market?
it would be hard for me because I don't really know in other parts of the country who is the right contact for the TAP program. But if a person reaches out to me, I will always be happy to ask the friends that I have here in the local TAP to see if they know someone at the respective TAP in other regions and make those introductions.
Perfect. Sorry for interrupting. Continue.
Of course. And lastly, I did want to mention Export Development Canada, which is also one of government's agencies. It's a crown corporation, but it's a bit different than the others that I mentioned earlier. And the way that's different is that, let's say you have signed the contract, you don't know what to do, and you have a business plan ready, and you're working on that business plan, but you need some way to protect yourselves, or you need some way to help you with working capital optimization, because growing globally makes can drain a little bit of that working capital. EDC is a great organization to go and talk to make sure that you're having enough capacity to actually be successful in those international waters.
Ah, cool. That's great information, and you covered a lot there. I mean, mitigating risks is probably one of the biggest concerns businesses have if they're going to go into a new market, and even the cultural differences that could be a risk to businesses, as you mentioned. So, it would be great to reach out to you and get some insight on that and some support as they're penetrating new markets. Can you maybe share just one example or a short story where your involvement materially changed the outcome for a Canadian exporter, where you unlocked finance, avoided a loss, or even just kept a launch on track?
There is a couple of stories that I can share because when we get involved, there's definitely ways that we support companies. But a couple of scenarios that first come to mind is, for example, one scenario was with a company that was not getting paid, and I will not say which country they were selling to, but they were selling to a country, and we found out that the buyer in that new country was a bit bullish and was not really willing to make the payment to our client. And we were able to influence the buyer by saying, hey, if you're not paying because you're a quasi-government entity, that will negatively impact the country's risk rating. And the country was at that time looking for a loan from the IMF.
Mhm.
And of course, we said, if IMF finds out, there might be issues with getting the loan, or might be issues with getting a more expensive loan, for example. And so we received, after having that conversation, the payment came in within 5 business days. So we helped the company really not go into trouble from non-payment. Because at the end of the day, depending on how big the business is, some invoices would be hard to absorb if they're not paid. So we always want to make sure that when you're dealing with a new counterparty in a new region, that you know who you're dealing with. Because at the end of the day, like in this scenario, it wasn't about the inability to pay. Of course, it exists, and sometimes the buyer that you're talking to in a new country may not have the enough capacity to make the payment. However, what we find is also that sometimes it's about the unwillingness to pay. So how do you deal with that unwillingness? And one of the ways is to ensure your receivables when you are in a different country. And you can do it through organizations like EDC, or you can look at some of the private organizations such as Alliance Trade, Intact Insurance, CoFast, and so on. So there's quite a list. Or you could look at finding ways to mitigate those non-payments through utilizing some of the bank instruments. One thing I found when I moved here to Canada is that people typically prefer paying through open account terms, which means just wiring the money and be done with that. But when you're dealing with different markets and different jurisdictions where the legislation may not be as straightforward as in Canada, there are bank instruments as well, such as letters of credit that people forget about, or also known as documentary letters of credit. W- And that's another great way to mitigate some of that non-payment risk, because now it's not the risk of the buyer, it's the bank's risk. And usually, you have more information on the bank. The bank really cares about its reputation and so on. So it's another great way to mitigate some of that non-payment risk. But that's just kind of one example of how we helped in terms of making sure that the company gets paid. There's a lot of examples of a company entering a new market, and they want to enter a new market through buying another company. Maybe the owners of that uh, company that they found are retiring. Maybe they're just going through some turmoil. Maybe it's actually a larger company in a new country than the company in Canada. So they want to buy that larger company. There are ways to help with that as well. So there could be different scenarios. If I start going into a rant about all kinds of scenarios, this will be your longest episode ever. But
We
I
also
don't want to.
don't want to scare people off by thinking it's all just challenges, right?
Exactly, exactly. It's not all just challenges. There's a lot of way to find support. I believe that the biggest challenge that we face and businesses face is that how do you find information about something that you don't know? And of course, when entering a new market, there's a lot of unknowns, and that's why there's organizations such as EDC, the Trade Commissioners, the Government of Alberta, TAP, and so on and so forth, to help you understand those nuances, because they have seen it many, many times through different customers, different markets, different regions, and even different products and services.
That's a great lead into then for founders and executive teams that are watching today. What are some early controls or funding moves that make the biggest difference when they are testing a new market?
So I would say we have to differentiate first between how are you entering. Are you a B2C business or a B2B business? Because if you're going, let's say for a B2C, then of course you have to engage a marketing company. You have to analyze the local markets, the demands, and you have to see what it means to enter that market with your product. Because, for example, in some markets, the color red can be negatively interpreted. In other markets, it's the color white. In other markets, it's another color. So, understanding those cultural nuances will help you adapt your packaging to that market so this will be more successful. In some cultures, you know that the number 13 may have a bad uh, connotation to it. In others, it's number 4, and so on and so forth. And again, you have to understand those when you're entering and how you're presenting your proposition and your services and goods in that market. So a marketing company would definitely help you out on that front. But there's also other nuances. Is your systems ready? Like for example, your ERPs, are they adapted to the new market that you're penetrating? How are you thinking about the logistics? How are you thinking about the taxation? Are you setting up a new country, or are you just going to be shipping? Uh, how are you signing your contracts? Is it what Incoterms are using? Because those things really make the biggest difference. And I think when you look back at this, one of the biggest examples that I've read recently, so I didn't live through it, I wasn't here in Canada at the time, but when someone told me the example of Target's attempt to enter the Canadian market, I read a couple of articles about what they did. And to me, that was really interesting because when you read the just regular books about how to penetrate the market, some theoretical books, let's say, there's they give you steps of what not to do. And in that particular account, you could see that Target actually did all of those steps that they shouldn't have been doing. So they didn't take into account even the smallest things, like in Canada, you may have some products calculated in inches and other products calculated in centimeters, and that really hindered their warehousing systems. So again, those small nuances, they may seem small, but when you're penetrating the market, you have to understand them. And the same goes when you're doing deals with B2B. If and B2B especially, read the contracts and don't just read the contracts from a legal perspective. So, of course, hire a lawyer, but also hire a lawyer that has experience in international trade. And I'll give you a good example of what I mean by that. I remember looking at a deal where a company said that they have signed a contract to deliver their goods. And I'm going to say that their goods were not cheap and it took some time to manufacture them. But they said, we will give you 30% in advance, 50% prior to shipment, and then 20% after commissioning. The margins on the contract was about 20%. So I was at the bank at that time. I was working for the bank and we were looking at how to finance this deal. And to us, it's, hey, at least we'll get 80% of all the money prior to the good exiting Canada. So the goods are still here. The company has possession. It's a good that can be sold anywhere. So it wasn't uniquely built for that particular buyer. But when we started reading into the contract, one thing I noted was that one of the documents required to receive the second payment, the 50% payment, was a bill of lading. And as you may know, and I don't know if our viewers know or not, but a bill of lading is a transportation document, which means that first of all, to get it, the goods is already on a ship, and secondly, if you get sending the bill of lading to the buyer to receive a payment, that means you already lost possession of your goods because whoever holds the bill of lading in their hands, basically, that is the one that owns those goods. So when I started reading in those small nuances, I say, hey, you're not receiving the second payment prior to shipment. You're receiving the second payment post shipment. And if you take into account that it is given the payment comes in 30 days after the submission of the documents, it means that it's already somewhere in the sea and you have no control over it, you have no possession over it, so it's out of hand. So for the bank's perspective, the deal became much, much riskier. And of course, we found ways how to do it. There was like we engaged EDC at the time to provide us with some comfort. But at the end of the day, what I'm trying to say is that those small nuances matter when you're dealing in international waters. And it's always good to engage a lawyer, not just who looks at things from a legal perspective, but has experience in international commerce.
Yeah, that's a great example, of a risk they obviously had overlooked or may not have seen without you bringing it to their attention. And then, as we've already discussed today, there's a bunch of different solutions, whether it's a letter of a credit or receivable insurance or something that you apply so the business won't have or can mitigate that risk, and or you know doing some due diligence on the receiver and their international experience as well, and what the history of payments is like from them. So a lot of different ways that you can de-risk that, and for every different client that you work with, depending on who they're dealing with, the region, the client, everything else, you could employ a different solution and or a more cost-effective solution. So this is great stuff to review. If you had to, if I asked you just what are three short practical things that exporters can do to reduce market risk and improve readiness, what would you say?
Well, first of all, I would say understand the market that you're entering. And when I say understand it, I mean really understand it. Not just look into, hey, we're going to the States or we're going to Europe. Dig it in a bit deeper. Look in what are the available trade agreements right now between these countries. What works, what doesn't work. Which products do these trade agreements encompass and services as well. Try to understand trade routes. So for example, if you're sending goods to Japan, try to find logistics of how you're going to send them because it may differ. If you're sending it by plane, if you're sending it by sea, uh, there's nuances, right? If it's a product that is quickly perishable, maybe plane is your answer, but it's going to be a bit more expensive. Maybe by sea, it's uh, it's going to be longer, but if it's not perishable, maybe that's the way to go. But also understand capacity. So, for example, if you're sending it through the BC port, try to understand, does the BC port have enough capacity to process all of the goods that you're going to be sending through that port? So those type of things you really need to understand. Another thing I would say, also understand the market, kind of the population of the market, the age of the market, the availability of funds in those markets. So sometimes we think about hey, I'm gonna say send goods to, and when I say sorry, I'm just gonna step back. When I say the age of the market, what I mean is by if it's an older population or if it's a younger population, tastes change depending on the age gaps, right? Plus, the availability of income may also be different. And if you're just fresh out of university, you may not have as much disposable income on some of the fund products. Whereas when you're a bit older, maybe you have that disposable income. So depending on what you're selling, maybe understand those nuances too. But also, what I'm also trying to understand is look into not just the so-called sexy markets, such as the States or Europe. Look at some of the markets that others are not thinking about. Maybe they have good capacity for you penetrating them. Maybe they don't have enough or not a lot of competitiveness in those markets for your particular product or service. So it will be an easier game. Maybe it's a country that really enjoys goods from Canada, where, for example, let's say in some of the Indo-Pac countries, they really like Canadian agricultural products because they know that it's sort of high standards and high quality. So really understand those small things really helps you when you're penetrating the markets. And number three, I would say look internally at the organization in the sense that does the firm itself have enough capacity to actually deliver on some of those international promises? So, for example, I've seen multiple times when a company, and I'm going to throw out numbers here, is doing about 10 million of annual revenue in Canada, and all of a sudden they receive a $50 million contract in the States. Do you have enough capacity to actually deliver on that contract? Do you have cash flow? Because if you don't have enough cash flow, how are you going to hire more people, buy more materials to perform on that contract? And secondly, if it's a manufacturing company, for example, do you have enough equipment to manufacture it? How are you going to source it? What are the systems in place to do it? And also the mentality of a company, because sometimes it's challenging for a company to go from a being of that small business startup mentality to becoming that mid-market and more of an established company mentality. So really understand the company itself, because at the end of the day, when you're entering the exporter journey, it's a mirror for you to look back at yourself and say, am I ready for it? Because the last thing you want to do is to do something that you're not completely ready for. And when I say you're ready, I'm not talking about being perfect at it. Of course, there's going to be some bumps along the road. And however, if the better you understand the internal things that you need to tweak a little bit, the easier it's going to be for you to be able to enter and grow globally.
Yeah, great points, and I really resonate with the one about looking internally at the business and deciding. People would think, oh my gosh, we're going to go from 10 to 50 million. There's no negative connotation to that. That's amazing. But what people fail to realize is that more businesses fail from growth than fail from lack of business. So that rapidly taking on new business that you're not prepared for could could be, could destroy the business. So you really need to shine that flashlight inwards and see how ready you are for that growth. And then, if you're concerned about it, reach out to people like yourself and myself to find out kind of what are the things you should be considering in advance of putting your name down, signing a document that maybe you can't deliver on, and what are the consequences if you don't deliver. Understanding all of those things will help to make sure that the business is successful at the end of the day. Samir, it was excellent chatting with you today. I appreciate all of the insights, and thank you for joining me today.
No, thank you, Toby. Thank you for having me. I really appreciate having this conversation and this opportunity to talk about something I'm really passionate about.
Thanks again. And if you were watching today and you want to learn more, please reach out to Samir or I. This episode was sponsored as usual by Hyperion Business Solutions. And if you're interested in building better systems, solving business problems, and making your business not only more profitable, but easier to run, then please follow us and or reach out for a free conversation.